Now we bring in senior markets correspondent Kevin Green. I know you. Tell us a little bit about some of these stock market action that you're watching.
Yeah, well, Nicole, right now we are seeing over 80% of the stocks in the S&P 500 in the green today, and a really strong showing. All 11 sectors are in the green as well. So what you're kind of looking at is a little bit of a rebound from Friday's action. We created a pretty significant gap to the downside between Thursday and Friday, and now we are testing that gap. And on an intraday basis, you're really looking at the 6,300 level as your first major area of resistance for this market. To be precise, Nicole, it's around 6,304 here, where you could actually see maybe some selling taking place here after the open of today's session here, but we have been able to break above that 6270 level, which is kind of that first area of resistance that we would kind of really focus on for today's open. And if we are able to try to fill this gap, you're looking at 6340 to the upside. I'm not sure if we're going to be able to hit that today. We have a strong showing once again, some economic data coming at the top of the hour here, but we have been able to see a decent little rebound to the upside, and hopefully we're able to maintain that. To the downside, if we have any type of reversal, what you really want to be able to hold is 6210. You saw some earlier flows on the options front around that level, and we do have a demand zone that is sitting there as well, which just means that on Friday, when we kind of violated and hit that 6215, 6212-ish area, we did see some buyers really stepping in, and it's represented by those candles at that lower level here. We had a pretty decent hammer candle kind of start off the day on Friday, and then throughout the day, we tried to kind of recover from those lows. So you'd like to see some buyers really stepping in, but a really strong showing once again, testing half gap, so you might see a significant amount of volatility around these levels, but a broadening of the market. It's not really a concentrated type of relief rally right now. And once again, you just would hope that the news flow is able to hold up, and hopefully we're able to recapture that 20-day moving average, which we did lose on Friday, which once again is sitting at around that 6305 level for the S&P 500.
All right. I wanted to take a look here at the VIX. Last week we saw this pop. We were almost at 22, I believe. What are your thoughts? I mean, now as you're seeing this action today and what we've looked at recently.
Yeah, Nicole, I mean, obviously the headlines that we've seen, especially on Friday when it came to the labor report, as well as the firing of the BLS chairman or commissioner, I'm sorry. Obviously, that has been kind of the headlines that have been driving this market. But if you're kind of looking at volatility just in general, we were actually at relatively low levels over the last couple of weeks. And you can see that not only by the VIX, which was below that 15 level for a considerable amount of days, but also realized volatility. Or if you're just looking at realized moves in the S&P 500, they were pretty muted at the end of the day here. So at the end of the day, when you start seeing volatility getting too cheap and you start seeing it kind of inch up, which we did start seeing it inch up a little bit on Thursday, that could also kind of lead to this restructuring or this repositioning in the market. So not only is the news headline kind of that catalyst to drive it, but I do believe that this is also mechanical. On this chart here, we have the VIX spread. So we're looking at the VIX minus the VIX futures contract just to look at the backwardation or even the normalization of that curve. And what you see at those highs was really the VIX or this kind of this kind of normalization, if you will, or this spread at relatively very low levels. So it's easier to re-rate volatility higher than it to go actually lower, and this is exactly what we started to see. We started to see that spread kind of inching to the upside here. We had the volatility on Friday. We went into a backwardation, just meaning that near-term risk in the market was priced in higher than 30 days out, and this is where you kind of see that reset. But if we kind of look at this chart once again, usually these pops back to the upside or this kind of move back into backwardation or the near-term fear of being put back into the market is actually a pretty decent reset for the S&P 500, and you are seeing that that follow through here today. Hopefully that's going to continue for the remainder of the week. From an earnings standpoint, not a lot. We don't have any from the Mag 7 coming out, but a lot of these speculative stocks or these high beta stocks like PLTR, if they are able to provide some pretty decent earnings announcements, maybe we start seeing that risk on trade creeping back into the market. And maybe this is a blip on the radar for now until we actually get more economic data that could influence the Fed's decision in September.
Yeah, I mean, when we think about what's going on geopolitically, a final quick thought there, because that certainly heats up, pulls back, but it's still a hot topic and of course, of great concern.
Yeah, I would say probably one of the under the radar type of news headlines that we have to look out for, Nicole, this week is going to be on Friday. President Trump has kind of given a warning to Russia in order to come to the negotiation table when it comes to the Russia-Ukraine conflict. And if not, it does appear that we could see additional sanctions on Russia and potentially some tariffs being put on countries that are actually trading with Russia when it comes to crude oil. And actually, a lot of the headlines that we saw over the weekend around India seems like there's a little bit of back and forth there. The reason why I kind of bring this up, some of the areas in the market to kind of watch if we do see maybe some of these sanctions going through or some of the retaliatory actions from President Trump actually coming to fruition, looking at crude oil spiking, looking at natural gas prices as well as LNG or Cheniere, and we'll use this as a proxy for liquefied natural gas. And the other ETF that I have on there, SHLD, this is just the Global X Defense ETF, if that just starts to catch a bid as well. So this could be a situation where obviously it's a geopolitical risk event because of war, but also could translate into increased tariffs on some of our bigger trading partners that might not be priced in or factored in right now.
Kevin Green, welcome back. I don't know if you missed us, but we missed you. Welcome back, Kevin Green. Thank you so much. Obviously, some really key reporting there as usual. Kevin, thank you.